Hi, friends. It's Jay Sexton with Sexton Financial Mentoring, bringing you episode 8 in our budget series. This episode deals with forecasting, which I believe is the most powerful tool you have in your budgeting arsenal. Some over the counter softwares make it a little difficult to look too far into the future or to set it up correctly so it looks just like your current pay periods. But using Excel, we can forecast as far into the future as we want. We already have everything set up in our budget. We have our income, what we expect with income and what we expect with our expenses. So we can budget that out as far into the future as we want. And the power in that lies in avoiding those unexpected things or you just don't plan on very often that pop up, and you don't want to discover those when you're working on the current pay period. That's a kind of late in the game to see those things coming. So with forecasting, we can see those things coming from a long ways off and prepare for them appropriately. So when we're using forecasting, I'll show you how to put future pay periods into your budget, but also how to hide them so that they're not taking up a lot of screen space, because you don't want to be working and constantly scrolling. We like it to be easy to use and look nice and clean. So I'll show you how to do that in Excel. It's super easy. So if you get your Excel workbook ready to go, let's get to it. So we left off on this one, having completed the pay period for 6/16 to 6/29, and then just starting the next one and carrying over our budget bucket previous balances and our expected income. We hadn't gone any farther than that in episode 7, but in this episode, I'm going to actually add the current pay period, which is now this one, and 3 pay periods into the future, so we can look at what that forecasting allows us to see. So I've already worked this out off screen, so I'm going to be copying and pasting these in, and so you won't see, but you already know how to do this. We've been working through this, so you're going to not need to work through it step by step. We're doing these exactly as we've done them in the last few videos, but to save time, I'm just going to copy them over from another copy that I've been working on. So this is the current pay period. We worked this out. Now we haven't done any of the unscheduled transactions yet, because we're assuming this is the first day of this pay period. So we haven't gone shopping yet. We haven't gotten gas or anything like that. So we've just started this pay period, but I want to look 3 pay periods in advance into the future. So I'm just going to add that space just like we normally would. And I would, fill it out exactly how we would if we were doing this regularly. So there's the next pay period. And of course, like I said, I've already worked it out, but that's how you would have filled it all out. Now, a couple things. This current pay period, we had some carryover from our last pay period's budget bucket. So these are added to, these balances carried over and added to what we budgeted for those items. In the future pay periods, we can only account for what we've budgeted. We don't know if we're going to have anything left over in those budget buckets, so we can't do that. We also don't know if we're going to have any extra income from overtime or anything like that, so we can only account for what we expect to get. So these aren't completely finished. These are budgeted, what we calculate that we're going to have, but we will still correct those. If we have some overtime, we'll update the income. If we have, carryover from this budget bucket into this pay period, we'll have to add those. So these are estimates, and that's what forecasting is based on. Based on the budget, what do I think I'm going to have into the future? Now I'm going to add a couple more because I really want to look further into the future on these. So I'm actually going to end up adding 2 more pay periods here. So we've worked these out, and then we'll work out the next one as well. Now, one thing you're going to notice as I'm doing these is because we work from left to right, we do the most recent all the way on the left. If I were to leave this like this, I'd have to scroll way back here every time if I want to use that, because right now it's all the way over here. If I did one more, it'd be completely off the screen. And that's kind of a pain. I don't want to be working. I'd rather have it over here where I'm used to seeing it. So if we look through this, we've accounted for our normal savings is $283.83 every pay period. So we've accounted for that each time. We've accounted for all of our scheduled transactions for that pay period only, reflected by those dates. And our budget buckets, we've just accounted for the normal amounts for each of those. Now, for things like utilities, we did the self-level pay calculation. We set it up that way so it could be budgeted the same. You can actually do that for gas too. I don't think I mentioned that in the past. If you wanted to do a average spend on gas over the last 12 months, and then add 15% to make that your budgeted amount. It works the same way as the utilities. Then you can have a set budgeted amount. And if you go over that, because gas prices are like utility prices, it's going to be different all the time. Gas prices change sometimes daily. So if you just budget a little bit higher than your average spend on those times where gas is a little more expensive, you'll have a little bit of a savings account for that. Now, and also during all these pay periods that are into the future, we can't update balances like on our debt and things like that because we don't know what those future amounts are going to be. So we have to wait till we get to the pay period. We're going to work the pay period just like we always do. But to be able to forecast, I can go ahead and create pay periods into the future, set them up just like I normally would. I can't do any of the unscheduled transactions because I don't know them yet. But where this really, I think, lends some power is things like this. I mentioned before, something like property tax that comes up, once a year, usually split into two payments depending on your county. It's just not something you're thinking about all the time. But since I know I'm looking at this into the future, I was able to say, you know what, that's coming up. So I put it in here. And because we did this conditional formatting, when I put it in there, it turned that cell red. My balance is red. Because if I don't bring over what I've saved up for property tax from my savings account, I'm going to be negative that pay period. And since I did forecasting, I also know I'm going to be negative in the next pay period too. But look what happens. Even based on all my normal amounts, by the third pay period into the future, I'm back above zero. So I know that this does impact me, but it doesn't impact me forever. And I had only previously saved up to this current pay period over here. I had only saved up, $416 for property tax because we started this kind of in the middle of spring. Now, if I move that whole amount over, it's going to be enough. It's going to put me above zero for this pay period, and this pay period is already above zero. So I didn't have to have that whole amount saved quite yet. I've been carrying over a pretty decent balance each time because of what I started with. Now, that may not apply to you. Again, this is an example. You might have to carry over some from your emergency fund if you don't have all of that, because not paying your property taxes, I would consider that an emergency if you don't want to lose your house. So this gives us some preview into the future. Now, again, I don't like my working pay period to be way over here, and this is a 22-inch monitor. If you're working on a little laptop, you won't see this at all. You might be lucky to see this, or you'll have to shrink the font, and then it's real small. I don't like to do that either. I'm getting old, so I need to have it pretty big. So what we can do, instead of doing those things that make it harder to read, we can actually hide a range of cells. I prefer to have my current pay period viewable and my next pay period viewable. So I'm only going to hide these other two that are in the future. And the way you do that is you select all of the columns you want to hide, the whole column. So I want to hide both of those pay periods and the little space there. Once those are highlighted, if you right click and go down here to hide, whoop, they disappear. So you'll notice that this is my current pay period, the one that I'm working on right now, and I'm looking ahead into the next pay period. So that's going to be viewable right here all the time. Now you say, well, that's all great, but how do I get those back? So to get those back, you need to actually click in the corner up here, left click in the corner. That's going to select your entire worksheet. Now, here's where Excel's a little kooky. If you go down here in this gray area and right click, it's not going to unhide anything. If you hit unhide, nothing happens. You actually have to hover on the column just like that. And you can hover on any of these columns, but just hover on a column, then right click and hit unhide, and it'll give it back to you. Now you can see we're starting over here at A, and that's as far ahead as we looked. So on a normal, everyday basis, I'm going to hide those future two pay periods so I can see the one I'm working on, and I like to always be able to see what the next one looks like in case I'm going to run into any trouble, or I think of something, I go, oh, you know what? Shoot, I forgot it was so-and-so's birthday on July 20th. So now I need to figure that into here on July 20th, and I know that's going to put me even further behind. So I better have some birthday money saved up or some way to cover that expense. Now, this is just one pay period extra in view. In real life, I actually have the next two pay periods in view, so I'm always working with 3 pay periods in view, the one I'm on plus 2 in the future. and I hide the next 2 or 3. So sometimes I have 6 pay periods ahead already calculated, and that's what I'm working from. But that kind of forecasting is super powerful. If you use any kind of over-the-counter software for budgeting, that's the one thing that they really don't make it easy for you to do is forecasting. It's super difficult to set up forecasting in most of the popular budgeting softwares. But here, using Excel, it's pretty raw. We have control over every bit of it. We can go out as far. I could do this for 10 years in advance if I wanted. Now, that would be kind of silly because so much is going to change over that time, but I could if I wanted to. So use that forecasting. It's super powerful. It really gives you a window into what's coming up. So you don't get to, if you didn't use it and you were working on this pay period and you go to set up the next pay period and you go, oh, that's catastrophic. That's bad. I wish I would have known that in advance. Well, that's what forecasting allows you to do. So use that. It's super powerful. It gives you wonderful insight. Hope you've enjoyed the video and have a great day. Thanks for watching, and thanks to all of you who have supported SFM in the past. While we do not charge for our instructional videos, we do need your support to keep them free. Any amount from $5 to $10 if you found the video helpful, to $50 or $100 if you'd like to make a donation on behalf of those who can't, or any amount in between is greatly appreciated. You'll see here a few convenient ways to contribute, and every single bit helps to keep our mission going, including subscribing to the channel and sharing the videos, so please do that too. Until next time, remember to sacrifice while it's voluntary. Bless you all.